Welcome back to the How to Trade Crypto series. In this episode, we're going to go over how to be profitable with the use of trend lines and various chart patterns. Let's jump straight into this one.
Case we're talking about Bitcoin. Is this Bitcoin run that we're seeing now?
Bitcoin and crypto bears are Bitcoin. If you look here on the chart around, it's sort of just shy, just underneath 42. Here is why the cryptocurrency.
This is big. This is significant.
Let's start off with trend lines. What exactly are trend lines? Well, essentially, they are straight lines that connect two or more points of support or resistance in a trending market. So we can mark up trend lines in when the market's in a downward trend, or when the market's in an upward trend, or even if the market's just simply moving sideways and is consolidating, we mark up these horizontal trend lines. So what I want to do is just show you some examples of those first of all, and then we'll look at how exactly we can trade those. So if you take a look here, my screen, as I'm always doing at the moment, using the example BTC, USD, Bitcoin. Okay, so firstly, pay attention to, we've got a lot of lines here. So firstly, pay attention to this one. What's this? This is a trend line acting in the upward market. So you can see, look, two or more points, many points here where this trend line has acted as support. So this is validated from this point here, really, because we've had two or more. This is confirmed as a support, you know, in an upward market. Okay, we're trending to the upside, so we know this is now support. And obviously, eventually that was broken out of. We'll go into that into detail in a moment. Now, we've also got a trend line that's acting as resistance, as you can see here, in a downward market. Look, 1, 2, or more, as you can see. Various rejections there, and we're trending to the downside, okay? And I've also got marked up. You see these blue lines here? So let me just remove these white ones just so you can see it really nice and clearly. Okay, look, this is acting as trend lines in a horizontal market. You see how we're ranging, the price action is consolidating. Okay, so those are the different types of trend lines that you can have. But let's look at some examples now of how we can actually trade those. Now, with all trend lines, when it comes to actually trading them, it is very much subjective. It's down to what works for you, okay, with other reasons to take trades, other confluences, okay, because when I say it's subjective, trend lines, when we're looking at them, we can either look at the support touching the candlestick wick. Remember, we went over that in our previous lesson, the wicks of the candle, either that touching the support or the resistance, okay, or are we looking at the body of the candlestick touching that support or resistance? That's what I mean by it's subjective, and you can work out what's best for you and what proves to be more profitable with your trading strategy. Okay, so let me just show you some examples here of when we'd look to take a trade. Okay, so firstly, I want to start off the one where we've had this validated. Look, 1, 2, remember we're looking for 2 or more taps of our trend line connecting the market in a trending market, and obviously this is in an upward trend. How many times if I can say that? Anyway, we're trending to the upside here. So when would you look at taking a trade? Well, and how? Well, at the end of the day, when we know we've got support, we want to buy, right? So we want to buy as close to possible as this trend line, because we know there's support there. It's going to cushion the price and poof, push it to the upside. So that's exactly what we saw here. You know, as I say, we validated that with a couple of taps there. So when we're taking longs, you know, we want to take as close to the trend line as possible. We want to leave a bit of breathing room below in terms of a stop, our stop loss below that trend line. And then in terms of targets, that's down to you. You're running to the upside, you're looking left. Where has the price been before? You know, before when we've bounced off this support, or, you know, looking left from current areas when the price has caught some buy momentum like we have here and here to left. How far have we gone up to the upside? So you just judge it off that, and then obviously other confluences as well. That's just to give you an example there, okay? And you can see where the price might run into resistance now after buying from this area, okay? So that's just an example. In a downward trend, same sort of principle, guys, okay? So look, we saw our rejections here, 1, 2, so this is confirmed really, and then look, here's another one down here. So again, you'd be wanting to take a short as close to possible, again, looking for other confluences though, okay? Let's just give you an example, as close to possible to that trend line. You'd be leaving a bit of breathing room above that, just accommodate any short-lived wicks perhaps, or any fake outs, so on and so forth. Entering a short, and then looking left. When we've fallen from these current areas, how far down are we coming down? Look here, for example, we've rejected around this region before, we come all the way down here. So it's just sort of looking left, history repeats itself, finding other confluences for where you're gonna exit your trade, okay? Other reasons for the areas that you're gonna exit, and then sort of basing it off that. And as you can see, trade idea there. And then look, this is in the sideward sideways market, okay? When we're consolidating, look, ranging. So in this case, what we want to be doing, and it's sometimes if you're a range trader, this is beautiful for you, because essentially you're just looking for the rejection here, trading it all the way down to next support. Then we're going all the way up, rejection here, all the way down to next support. So with this case, you're looking for, okay, look, 1, 2, got our taps there. So here, again, stop will be placed a little bit of breathing room above this area, this resistance level, and then we'll be working our way down to this next area of support. So you just see how easy that is potentially there, just to take some trades in a ranging market. Now, I want to show you where we've got a confluence for a double sort of 2 reasons for taking a trade. Okay, so look, guys, here's number 1 for potentially a selling idea. You see this trend line in upward trend? Can you see that? And you see now how we're breaking out here of the upward trend line, okay, this one. And then look, we're also breaking out of this one, these trend lines. You see this horizontal market where we're ranging? Look at that sort of breakout there. We broke out, look at the body of the candlestick, broke below this trend line and this trend line. And then this following one, retested that, found rejections, and then selling, downward pressure. So again, you know, when you're trading this, you're shorting as close to possible to those trend lines, leaving a bit of breathing room above just in case any short-lived wicks. And then look, where have we fallen before? Look to the left, we've fallen down here, you know, around that 40,000 area. Okay, so that's 2 reasons there, 2 confluences, solid confluences to take a trade, because we've broken out of 2 key trend line areas. Okay, so this horizontal one, and then this one on the incline on the upward trend. Chart patterns. What exactly are chart patterns? Well, the name gives it away. They're patterns that form on your chart, whether we get buying bullish chart patterns or selling bearish chart patterns. And I just want to jump straight into some examples that have served me well over the years. Classic, good, profitable examples of some chart patterns. So just take a look here at me. Again, looking at BTC USD. The first one I want to start with what's known as a bullish flag structure. So essentially with a bullish flag, it looks like a flag. You know, you have a pole and then you've got the flag, as you can see. So a trend line will act above as the resistance, and a trend line will act below as support. And price action essentially just consolidating. You see where we've been trending to the upside. Now it's having a bit of a break, forming a flag structure. And then with these, what happens is we break out and we extend to the upside. Now, when you are trading these, you can look for other confluence as well to support you for taking this buying position. But essentially what we want to see when we are trading flags, bullish flags, we want to measure the pole of that. Okay, and we want to see the equivalent to the breakout to the upside, and that's where our target would be. Okay, so that's just to give you an example of a bullish flag. Now, with a bearish flag, it's the same, but with bullish flags, obviously we're in a trending market to the upside. With a bearish flag, it's to the downside. So here, as example, you see we're trending to the downside, a flag. So here's the trend line, and here's the trend line below. Okay, so initially this one acts in resistance, and this one acts support. Here's all of our pole of the flag. So let's just quickly measure this. So the pole, again, subjective, find what works for you, but this is the pole for me, and then I want to see the equivalent on a breakout to the downside, and obviously we saw that plus a little bit more. Okay, so those are flags. And then we've also got pennants. Now, pennants are similar to flags, but they're just a little bit more triangular. So you can see this triangular structure here. Price action again in a bull market. Now we're just having a bit of a breather. The bulls, the buyers having a breather, narrowing. Look, breakout, retest, and extension to the upside. Again, we should, similar to sort of flags, we want to see the equivalent to the breakout, measuring the pole of this one from here to here. Okay, measuring the pole of the pennant, and then we want to see the equivalent to breakout, and obviously we saw that. And now let's take a look at a bearish pennant. Again, look, bearish pennant, triangular structure, narrowing in a bear market, narrowing. The seller's having a break, subject to more selling. As you can see, we very much saw that. So again, let's just sort of measure our pole here of our pennant, and then we want to be seeing the equivalent to the breakout to the downside, and that's where our targets would be. So those are bearish and bullish pennants, or bullish and bearish pennants. I also want to show you another shoulder structure. I just gave that one away. Another pattern. This one's called head and shoulders. Head, shoulders, toes. So essentially, the name gives it away. We have a left shoulder, okay, and this is the neckline. We have a head, and we have a right shoulder. So what we want to see here is eventually this neckline being breached, the head and shoulders playing out, so the sellers break out of this support. And that's the neckline. So left shoulder, head, right shoulder. And when we're trading the head and shoulders, we want to see the equivalent from the head to the neckline for our targets when we're breaking out of that. And so did we see that, okay? We saw that. And there's also what's known as inverse head and shoulders, okay? So I just want to show you inverse. It's just essentially the head and shoulders flipped upside down. So here, okay, look, left shoulder on that neckline, head on that neckline, right shoulder, look at that. And again, we want to see the equivalent, but obviously the breakout to the upside with this one. We're expecting that to break out to the upside with the inverse head and shoulders. And obviously from the neckline there, we well and truly dwarf that. Okay, I want to show you another thing, a pattern, which is called a double bottom. Ooh, cheeks. So it's literally a double bottom. It's a bum. Look, you can see this is a bum. So you've got one cheek, two cheek. So one bottom, two bottom. All right, so this is the bottom area. Look, you see, we've hit this support bottom. We've hit this support bottom. Now with the bottom as well, there's a neckline. You see this here? It's almost like a W structure as well. You can look at it as a W. Okay, so there, we've broken out and retested, and then we've extended to the upside. So with double bottoms, you know, we want to see the equivalent from the bottom to the neckline in terms of the breakout from that neckline area to the upside. And that's where our targets would be. Just want to show you one more example. This one being a double top. So similar to double bottom, just from the top side of things. And this is where we're looking for sellers to eventually come into play. So look, one top, two top. And this one like an M structure. Okay, and how we trade this is we want to see a breakout of the neckline. Can you see here? Look, top, neckline. Top, neckline. And obviously, look, breakout, retest, and then drop to the downside. Now, same as with this, is we measure the distance from the top to the neckline, and we want to see the equivalent to the breakout. And obviously, look, we very much saw that. Okay, so there's some classic examples, some chart patterns that prove to be profitable. Now, there's hundreds more. I'm just giving you some that have worked really well for me. Very simple to apply to any trading strategy. So there you have it, guys. How to be profitable with simply using trend lines and various chart patterns there. Now, what I want you to do is smash up. You need to smash up that subscribe button and that like button if you want this series to continue, because I could easily just stop it, okay? And as a reminder, you know, if you click the link in the description of this video, there's a massive opportunity for you to potentially invest in a cryptocurrency exchange. There's no other exchanges that are doing that, okay? You have an opportunity to invest in CoinCasso, massive opportunity, big member benefits and investor benefits, NFT drops, merchandise, a lot of exclusive member access, investor access. So you can click the link in the description to understand a little bit more about that. In my next video, I'm gonna be covering supply and demand, a key part of the way in which I trade, and a lot of institutions do as well, looking at these key areas where these sellers and these buyers are coming into play, that's supply and demand. Other than that, please do not hesitate to follow me on Instagram, follow CoinCasso on Instagram. Stay lit, let's get it.